Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another coffee hour. All right, today we have a lot to cover. Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another coffee hour. All right, today we have a lot to cover. Good morning, good afternoon, good evening to wherever you are. Hold up. That was weird. That was weird. That was so weird. Holy hell. Anyways, as I was saying, we got a lot to cover. We're going to be going over the SEC's new guidance for crypto. I think that is a huge deal. It is not the Clarity Act, right? The Clarity Act did not get passed, but this is coming from, the SEC chair, Paul Atkins. So we'll be covering that. We'll be talking about a new, well, not a new, but it's a fund ETF that just changed to a 10.5% monthly high yield ETF. Something to keep in the back of your minds. It won't be a deep dive, all right? It'll be just kind of a brief overview. But I'm sure that this creator, this YouTube creator who I'll cover here in a moment, will definitely be doing a video on this in the future. I would not be surprised. We also have some Bmnr news in the sphere, so I'll be going over that, and Nvidia. There's a lot of news about Nvidia, so I definitely want to cover them. Nvidia is, one of my bullish, positions, so I definitely like to cover them whenever they come out. They just had their GTC. Jensen Huang, CEO of Nvidia, had a 2-hour, pretty much a whole 2-hour keynote. And I wanted to cover it on this stream, but I'm not going to kill you guys with a 2-hour stream where we're just listening to Jensen Huang, drone on about his, company. So I will probably be doing that after this stream, and then, doing some highlights or something on tomorrow's stream if I remember to clip out everything. So more to come. All right. So I see we have Sean in the chat. Hey, welcome, Sean. Always a pleasure to have you here. And we have Super Straight Guy, Paulie, making sure things are clear. Absolutely. Paul Atkins is definitely someone who's important for the crypto space. You also have the crypto czar, David Sachs, who's on the All In podcast. So both those people together, very bullish for the industry, very bullish for crypto. We just need to get that Clarity Act finally signed, and hopefully things will pick back up. But we already see Bitcoin doing pretty well as well. Anyways, guys, I have to quickly set this up on X because it does not auto set up sometimes, and that's kind of annoying. So let me just do that real fast. Shout out to the 16 viewers we have on X. Thank you for joining. Let's see here. Waiting on this, and that's kind of boom. All right, we're going to share this post. StreamYard is still having issues, so I want to make sure that this gets posted. All right, boom. Okay, we are good to go, ladies and gentlemen. We are good to go. Okay, so from the Sith Immortal, my portfolio is like a frog in a blender today, a swirl of green and red. Brother, I'm right there with you, man. It is Christmas lights in my portfolio. People say, you need to do red light therapy. And I do, because I open my Robinhood account pretty much every other hour and then get that red light therapy. So, we'll see if those benefits of red light therapy actually materialize. Okay, guys, let's get into it. Ton of news. Okay, got to get into this stuff. Stop distracting me with funny comments. Okay, so we're gonna do just a broad market overview. All right, I've been out of the kind of finance space for the last couple of days, so I'm catching up on a lot of things. But for the S&P 500, we are down 25 basis points. All right, over the last 5 days, starting on Monday, we had a slow climb back up. Again, there's still this big narrative that the S&P 500 is going to come crashing down. All right, no idea what the catalyst looks like. We still have a lot of geopolitics happening in the broader world. Last I checked, I believe oil was still around $100 a barrel. That is not good. You had the International Energy Agency and the G7 countries, ton of countries, looking to basically release their strategic reserves to kind of bring oil prices down. That is still going. That is still ongoing. All right. The whole conflict over there is still a big deal. I doubt, and I highly doubt there will be any capitulation by the Iranian government to, just basically embrace democracy and get a new regime, right? They are not going to just roll over. But, if you guys have been following that stuff, Pete Hegseth, General Kane, they recently did a press conference, and they've, basically been able to kind of eliminate a lot of those, missile launchers, drone launchers, things of that nature. So the GCC, the 6 countries that make up that GCC, they should start to see, a little more stability in the region. Anyways, getting off topic. All right, that's all geopolitics stuff. Anyways, back to the S&P 500. We are doing okay. All right, IGV, expanded tech sector software ETF. I like to just look at this from time to time. It's more of an indicator for me than anything. I don't hold a position in this at all. Like I said before, it's more of an indicator. It kind of tells us, are we entering back into a risk on, kind of regime here, where people start dumping money back into software, because the SaaS apocalypse has been pretty brutal the last couple of months, as you guys know, right? Really, really brutal. Down 27.44%, saw a low of 35%, right? Pretty brutal for software. And no company was spared from this. Even companies like Palantir were taking a massive hit. You had, not only that, but you had a lot of cybersecurity companies taking a hit after Anthropic released, a feature for scanning vulnerabilities and things like that. So Anthropic has been coming under a lot of heat. They've been in the news quite a bit, especially with the whole Department of War fiasco that they have going on. And now that they're suing the government, trying to get their contract back. But we'll see what comes of that. But anyways, still a lot of inflows coming into the tech sector ETF. So if that's something people are interested in, they can definitely take a look at that. All right. For gold, not doing what it's supposed to be doing. All right. Still not doing what it's supposed to be doing, which is supposed to be rising in geopolitical uncertain times. Instead, we see that Bitcoin is actually the one taking most of that money, right? Most of that inflow. So that has been really just weird, right? That has just been really weird. People are speculating that the reason for Bitcoin's, continued rise is all the money that's trying to escape out of Iran. People are putting their money into Bitcoin, but I just don't see that as the only point. It could be true, right? That, two things could be true at once, but I just don't see it as that. But we are seeing that happen, right? We are seeing that Bitcoin has actually been the best performing asset over the last 5 days, when gold really should have been there. Gold should have definitely been that asset. All right. So silver, all right, for all you silver bugs out there, silver bulls out there, still not doing too hot. All right, we are still not back to where we used to be. But again, you guys, for anyone that bought at the top, and you're obviously suffering 30%, right? Negative 30% here. For anyone that is bullish on silver, all right, fundamentally, you have to remember things did not change for silver. All right. Fundamentally, things did not change for gold. All right. Same thing for Bitcoin. Bitcoin is coming out of a pretty bad sell-off. All right. If you look at the last 6 months, pretty damn bad sell-off. All right. There's still the narrative that the 4-year cycle is still intact. Right. If you guys have been doing anything with Bitcoin or the crypto space, you would probably have come across the power rule. Or even the 4-year cycle, I'm sure. And it does seem to point that the 4-year cycle is intact, even though there's all this, institutional ownership of Bitcoin, et cetera, and the ETFs and that sort of stuff. I was definitely on record for saying that I believe, only based on kind of everything that I was reading, that the 4-year cycle was probably no longer the case. But there's new evidence coming out. There's new data coming out that's showing that no, that is in fact incorrect. That the 4-year cycle is still intact, right? If that is the case, then we could probably see Bitcoin going much lower, even though we're having a nice little bit of a pump over this last month. Some analysts are calling for about 85,000 Bitcoin before a leg down, right? That leg will really tell us where we're going to be going. So I'm keeping an eye open on this. I'm trying to be a little more strategic with my buys versus just dollar cost averaging, lump sums, once a week or every 2 weeks. I think for the next tranche, I'm probably going to wait until we get back into the 60s. It would be nice if we went into the 50s, but I'm not a market predictor. And again, if the 4-year cycle holds true, around October would technically be when Bitcoin is at its all-time lows before the inevitable grind higher, climb back up to the top. All right. So, and then in 2029 is when we'll see, Bitcoin peak at its top, and then, sell off like we saw back in October. Right. People are saying, there is a narrative out there that this was a liquidation event. A lot of Bitcoin traders were liquidated, et cetera, blah, blah, blah. You guys have heard all the stories, right? Some people believe Binance was behind it, right? Market makers got completely liquidated, annihilated during this time. But this perfectly aligned up, plus or minus a couple of days with the 4-year cycle, which is really, really interesting. Okay. So really interesting that this actually did happen and we did see a sell-off. So we should, again, in theory, if the power cycle, or excuse me, if the not only the power rule, but also the 4-year cycle holds true, we should probably see Bitcoin at around mid 50s. All right. So again, October is when we would see the absolute low. Don't hold me to that. That is just stuff I am reading and seeing out there on the interwebs. All right, let me just check the chat because I see we have a couple more things ready here. So let's see. So Sean has actually been nibbling on software. All right, speaking of software, yep, he's been nibbling on software. So good. We also have Skeptic in the chat. Hey, welcome. Has the iced coffee ready to go. Well, speaking of coffee, let me get a sip of my hot coffee to start my day. This is actually my second cup. All right. And this is a pretty big cup. All right. So I'm just basically finishing off the pot for the day. Let's see what else we got. Sean says, I added to my Bitcoin when it dipped under 67,000. That's what I'm talking about. That's what I added as well. I mean, it was like nerves of steel at that point. I was like, damn, it's scary when you saw that first initial like drop back in February, I think, or yeah, late January, and it was just dipping. I was like, holy crap, this is scary. But hey, man, hodl. You got to hodl. Well, actually, this is a ETF for software. Here's the ETF here's Bitcoin. Excuse me. Yeah, around January into February, same thing. That was brutal. And it's funny. That's when all of the FUD was coming out. That's when all the people were coming out of the woodwork. Oh, Bitcoin is dead. Bitcoin is dead. MSTR is getting liquidated. Yeah, they're below their cost basis. Blah, 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 blah. And now look at it. Right now, look at it. It's still going. Bitcoin is not dead. Bitcoin's been dead about 1,000 times in the past. This time is scary to say, but this time probably will be no different. It will drop to a certain level and then, spike back up. At least that is part of my fundamentals. That's part of my thesis, right? Let's see who else we have in here. We have Sergio. Well. Hello, everyone. Okay. I see. Here's the pink drinking tea. All right. That's what I'm talking about. Let's see what else we got. We have Gabby up in here. Hey, welcome. I see Wolf is in the chat. What do you think about Sailor's ATM machine buying more Bitcoin than is mined in months? I haven't heard about that. I have not read or heard anything about that. I know there's like 1 million Bitcoin left to be mined, but I have not heard anything about there being no more Bitcoin available. So yeah. But yeah, the ATM absolutely, like, MicroStrategy is going to have its day. It's people in MSTR are going to have their victory lap at some point. There's, again, whenever Bitcoin moves, usually it's the 10 best trading days in a year. Bitcoin has this crazy run up, right? This almost parabolic move to the upside. I think that will happen at some point. I don't know when, probably sometime around after October, right? It will have that moment, and MSTR is going to benefit, and MSTR is, shareholders are going to be very happy. Of course, that's not financial advice. I'm not telling you to go buy MSTR. Do not borrow my own conviction. Okay. But if you guys go down the rabbit hole of what MSTR is doing, you'll find that it is the first of its kind. It's absolutely genius, especially if you're bullish on Bitcoin. Okay. All right. Moving on, guys. Let's get into the news segment of this stream. So we have earnings. All right. Not a whole lot of stuff that I personally want to cover. We have some defense contractors like SAIC in here that just reported. I'm not going to cover them. The one I will be covering is Micron. So Micron will be covering tomorrow. Might even take a look at Red Cat because they are a drone company. And I did reopen a position in ONDL for Ondas 2X long. Ondas actually has their earnings coming up next week, so I definitely want to see what they're cooking in the background. They've been winning some big contracts. They have been revising their numbers, their guidance. So I'm really bullish on Ondas, even though I don't hold a common stock of Ondas. I do like Ondas. I sold all my common shares at around, I think, like $11 or something. Or maybe it was $10. I can't remember. But anyways, I did hop back into Ondas, but it's using the Defiance 2X long ETF ONDL. Not financial advice. Do your own due diligence. All right. But I will be covering Micron. I will be covering Red Cat. I might even take a look at Tencent. Tencent is a Chinese company. I forget specifically what they do, but I know they're pretty big in the AI trade over there. So definitely want to take a look at what they got cooking. Let's see what else we have. Alibaba, of course. Let's see what else. Yep, but that is it for any crypto aficionados. Gemini will definitely be something to look into. Let's see what else we have. And that's pretty much it. So not that many companies that I'm going to be following for this earnings week. But in case anyone does follow earnings, definitely something to look into or look forward to. All right. So for this week, we have some big stuff happening. We have the Federal Reserve going to have their press conference. All right. So Jerome Powell will be having a press conference Wednesday at 2:30 p.m. Right. That is after core PPI numbers come out. But we already know what the answer is, right? But it will be interesting to hear what he has to say, how the Fed is looking at, the overall economy. That will be interesting because they can't factor in the whole oil thing, the whole oil fiasco right now. It's been less than a month. So they can't really factor that into the numbers. But once and if this conflict continues, and if oil continues to stay at an elevated price, we're talking weeks to months, then I think, that will be bearish for a rate cut, right? Because inflation is going to start spiking like crazy because the cost of goods are going to go up because the cost of oil is up. All right. So we will see what comes of that. Again, interesting to hear what the Federal Reserve has to say. But not only that, we'll see where there might be potentially dissent. We won't see that in this meeting, but we'll see that in the Fed meeting minutes later on. Right. So we'll be able to see who's dissenting, who, or what they're actually talking about. Again, there's still a very small finite chance, very, very small, that rates could actually go up. Okay. They did not keep that off the table in their last Fed meeting minutes. They actually said that they want to at least have it as an option in case of anything, right? They don't want to just the narrative just to be, oh, we're getting rate cuts this year, rate cuts, right? They don't want that. They actually want to keep that option on the table. Moving on, we see this is from the CME Fed Watch group, or excuse me, the CME group. This is the Fed Watch tool. All right. So market's already pricing in no rate cut. Okay. No rate cut for April. All right. Definitely no rate cut for June, or actually there was a potential for June, right? Down here, this is around, after when Jerome Powell gets removed from the seat, moves on to bigger, better things. And then we get Kevin Warsh in the seat. Okay. So the market is pricing in about a 30% chance in July that we'll get a rate cut. And in June, there's a 20% chance. Okay. But these numbers will change right after we have the meeting in March and definitely after the meeting in April. All right. So let's see what else we got. Okay. Let's move on to kind of some other news. Actually, before I get into the ETF news and I get into the other stuff, I want to cover real briefly if I can find the article, unless I canceled it out. Let's see. No, right here. So I just want to cover this, a little bit of geopolitics news, all right, because it is important to what's going on in the broader world, important what's going on and happening to our portfolios. Okay. The Gulf states, which the GCC that I've spoken about in previous streams, you have Bahrain, Qatar, Saudi Arabia, Kuwait in the mix. There's two more. Can't think. Oh, the UAE. I forget what the last one is. It might be Iraq. But anyways, you have the Gulf states pressing the United States to basically get rid of Iran, conclude this war. A lot of energy production that's happening in these countries are halted right now because the risk is too high. There's still a backlog of ships that are stuck on both sides of the strait. The strait, Iran is allowing some of these tankers through if they're coming from certain countries, countries that are allied to them. But not only that, they struck a couple of different tankers and they, came out publicly and said, hey, we told you guys not to go through. If you want to go through, you need to contact us and we will make the arrangements not to shoot you. Right. So pretty crazy stuff that is still ongoing in the Gulf states, in the Middle East. Again, oil is still pretty high. So again, I personally don't think this is going to end or this is going to conclude anytime soon. Easily for the next couple of weeks. You do have some pressure coming from the other side. And when I mean the other side, I mean Iran's, partners, they want them to not only keep up the fight, but also let some of their tankers through, help bring down some of those energy prices. But again, 20% of energy shipping transits through the Strait of Hormuz. And when you're only allowing just a few ships, from these, partner nations or from friendly nations, non-US, non-Israel, then it's going to get interesting. It's definitely going to get very interesting for the markets. Okay. So I just wanted to cover this real quick. That stuff is still ongoing. It's still at the top of mind for a lot of people and definitely a lot of investors. Okay. So anyways, moving on, we have from Income Architect. Okay. So he's big YouTuber. You guys can check him out. But we have from Income Architect. He posted this and there was a lot of speculation of what he was talking about, right? But he said, fund managers got an email today saying checkmate, uncapped 10.5% yield with enhancement to the total returns on the index, S&P 500, right? You better start upping your game. I will be talking to the fund manager today to confirm the email, but on a chart, they are beating all the indexes they are writing on. All right, this isn't going to be an in-depth overview of the ETF, all right? Because later on, he came out and said what it is. It is OVL, ticker OVL, the overlay shares large cap equity ETF, okay? Is now a 10.5% payer, 16.52% price return since inception. Total return of VU, which is the S&P 500 from Vanguard, the S&P 500 index, during this time was 15.72%. Uncapped monthly payer. They have been generating 10.5% cash flow since inception. They are just now going to pay it out rather than keep it. So we have a really strong competitor to the space. Really interested to see what comes of this ETF. Really interested to get Income Architect's thoughts on this whole thing when he launches his video. I'm sure that video will be dropping at some time in the future. I definitely will be taking a look at this because funny enough, I'm sitting on a ton of dry powder. I am looking for another type of income play. I have been, deciding if I want to go into the miners, something like Miney or gold or silver. There's too many damn options. But, I do have XPay from Roundhill, and that is a target 20 managed distribution ETF over the S&P 500. But we all know that if the S&P 500 has a bad year, well, that 20% is going to pretty much destroy that ETF, right? Even a 10% pair like TPay from Roundhill or anything, right? You're going to get that dreaded NAV erosion, right? But the interesting about this one is that it's uncapped, right? So I don't know what that means. Still need to dig into probably the prospectus, get, hear the interview whenever he does the interview with the fund manager. Again, I think this will be a big addition to people's portfolios if they deliver on that promise. And it just became a 10.5% payer, all right? So we don't know what that is going to do to the price going forward, right? Or the returns going forward, all right? At least for me, when it comes to these index-based, cover call, income, whatever ETFs, I would rather have something trade flat from a price range perspective. I don't care if it's up or down 2 or 3 or 4% up or down, but it still pays out, right? It still pays out whatever the distribution is. That to me is important, right? Especially when I'm talking about, using margin for a portfolio or something like that. I would rather something trade flat or near flat while still being able to pay out distribution, right? So a lot of people have been flocking to things like Stretch, right? STRC from MSTR, right? So Stretch has been getting a lot of notoriety lately because of that. There's companies dumping into Stretch, putting Stretch on their balance sheets. There's a lot of investors dumping into Stretch. So again, something like that, in my opinion, is very attractive, right? Very attractive. But again, this is backed by MSTR. A lot of high risk, a lot of high risk notes there, a lot of high risk asterisks. Of course, do your own due diligence. So anyways, let's see. Just want to check the chat real quick. JPal is going to drop the mic and mention inflation. Yeah, that's going to be a big one. We'll be covering a little bit about MU a little later, actually. So just hold tight. Yeah, MU has been again, sharp incline, sharp decline, right? That's what happens. That's just, if we learned anything from silver, right? Nothing always goes up and to the right all the time. Let's see what else we have from Skeptic. ATCL you like an you'll like an auto callable. There you go again with those weird fringe ETFs. But no, I have been looking at the ATCL as well. It has been on my lineup. All right, quick shout out to the 62 viewers on X. Appreciate you guys joining, and the 33 viewers on YouTube. All right, your support is greatly appreciated. Sorry, I'm still working on my coffee over here. Okay, so gotta take a break there. Okay, one more. Okay, let's get into some Bitmine news. So I'm really bullish on Bitmine. So I like to cover Bitmine whenever I see news about them. And this one's actually a pretty big deal. So Bitmine announces Ethereum holdings reach 4.5, close to 4.6 million tokens in total crypto and cash holdings at $11.5 billion. Okay. Bitmine now owns 3.81% of ETH token supply. They're getting closer and closer to the 5% alchemy. All right. Their 5% goal of owning, 5% of the Ethereum network. Over 76% of the way to the alchemy of 5% in just 8 months. So MSTR has a goal of getting, Microstrategy has a goal of getting to 5% of the Bitcoin network. So Bitmine is already mostly there, and they've spent substantially far less money. But again, Bitcoin, Ethereum, et cetera, right? Two totally different crypto coins. And not only that, two different kind of use cases as well. A lot of banks, a lot of companies are moving onto Ethereum for financial, tokenization of assets, right? So if you believe in the Ethereum super cycle and what's coming for Ethereum, then, for me personally, that is what makes me bullish on Bitmine. Now, the second note is really interesting as well. Bitmine increased its investment into 8Co, ticker Orbs, which is led by Dan Ives from Wedbush Securities, by $80 million to support Orbs. All right, $50 million purchase of OpenAI equity. Orbs is the only proxy you can get right now that has direct exposure to OpenAI. So if you want to invest in OpenAI sort of indirectly, Orbs could be that method of doing so, right? But again, OpenAI is potentially IPOing later this year or potentially in the first half of 27. So I'm keeping an eye open on that. Also, I did see some news, although I didn't check into it, but I did see some posting that Tom Lee was going to be joining Orbs' board of directors, if I'm not mistaken, or their board or whatever. So he'll have some type of involvement in Orbs. I don't get the whole fascination with Orbs, WorldCoin, the Sam Altman backing. I haven't done any DD on Orbs myself. Excuse me. But that is interesting, in my opinion, intriguing, if I could use a different word than interesting, because I know Victor will get on me about that. But that OpenAI equity, that investment into OpenAI equity, that is really, really just interesting. I don't know how else to say it. Orbs is now the only publicly listed, excuse me, there we go. Orbs is now the only publicly listed equity in the world to give investor direct exposure to OpenAI. Total cash that Bmnr is holding is $1.2 billion. They hold $1.2 billion currently. They have no debt, virtually no debt. So I think, again, I'm very bullish on Bmnr. Just got to wait, just got to hold. If you're a believer in, the Bitcoin Ethereum ratio, and if Bitcoin power rule for your cycle reaches these insane numbers in the next couple of years, and if the Bitcoin Ethereum ratio holds true, because there's like a couple different of them, Bmnr stock price could potentially reach $500, right? And as high as $1,200, depending on how Ethereum gets adopted, all that, all that stuff, underneath it, right? Bitcoin ratio, Bitcoin Ethereum ratio, adoption of Ethereum rails for, financial assets, et cetera. I mean, there's a lot of things, in my opinion, to be bullish about Bitmine. I did not fully understand the whole investment into Beast Industries until much later. So now, again, I think that is, a net positive. And will be eventually accretive for investors. And not only that, Bitmine is staking a lot of their Ethereum as well. So they're making, some type of passive flows from their staked Ethereum. So again, unlike Bitcoin that is not getting staked from MSTR, Bitmine actually can, get some type of a dividend for investors potentially in the future. Not saying that's what is going to happen. So anyways, wanted to cover that for Bmnr. We're going to move into kind of this crypto news, because I think this is really big news. This is really fascinating. And I don't cover crypto a whole lot. It's mostly, like common stocks, Nvidia, Palantir, Google, Microsoft, all those big names, right? But what I think is really, really a big deal is what's happening and what the SEC chair, Paul Atkins, just dropped recently, okay? So from Coin Bureau, okay, the speech that changed crypto, SEC Chair Paul Atkins introducing token taxonomy. And basically, this isn't the Clarity Act, okay? Don't get this confused with the Clarity Act. But him dropping this holds a lot of weight. As a matter of fact, You can find the whole transcript of his speech right here on the SEC Gov website. I'll be adding all these links into the description after the conclusion of the stream, so you guys can have your own show notes. But yeah, I was going through this just a little bit to see what is going on. So we'll cover this video real quickly. All right, so let's listen in.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stablecoins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
Boom. What is a big deal? In case you did not hear it, because I actually had to listen to it a couple times and I still didn't fully grasp what was happening. But we can see from here, okay? On March 17, 2026, the U.S. Securities Exchange Commission issued a landmark guidance clarifying that most crypto assets, including those involved in staking, airdrops, and mining, are not securities. All right, the interpretation establishes a 5-category classification system distinguishing digital commodities, collectibles, tools, and stablecoins from tokenized digital securities. Okay, so non-security classification, digital commodities, things like a Bitcoin, digital collectibles, digital tools, payment stablecoins are deemed non-securities. Definition of securities: only tokenized financial instruments that function as traditional securities are classified as such. So, you're gonna have tokenized stocks, tokenized real estate, tokenized art, tokenized etc. Right? You're gonna have tokenized everything. That will be completely different from from digital commodities, digital collectibles, tools, and stable coins. So that is a big deal. And if you're wondering why that is a big deal, because as Skeptic had just mentioned, getting taxed on digital currency, right? What does that mean for taxes? What does that mean for buying and selling? What does this actually mean for all that stuff? Because that's really what this is all about, is how does the government going to tax you on all of this, right? Buying and selling. And this is, again, just using Google AI. This is what it had, right? There's no real big changes to how these instruments are going to get taxed. Okay, based on the SEC taxonomy led by Chairman Paul Atkins in late 25 and finalized in 26, Bitcoin is classified as a non-security digital commodity rather than an investment contract. All right, the classification fundamentally removes Bitcoin from the SEC's direct oversight as a security, but it does not change its fundamental tax treatment by the IRS, which already treats it as property. Instead, it provides regulatory clarity that reinforces already existing tax rules. So no change to the capital gains tax for Bitcoin or for buying and selling Bitcoin. Selling Bitcoin for cash or swapping it for another crypto is a taxable event. Tax calculation: you must report the difference between your cost basis, original purchase price, and the amount realized sale price as a capital gain or a loss. Long-term gains or held over 1 year will continue to be taxed at lower rates, 0% to 20%, while short-term held under 1 year, or if you're trading, are taxed as ordinary income. So that was, in my opinion, some of the biggest news for the crypto space. All right. So again, the SEC just issued its first ever definition for what crypto assets are, or assets are securities, right? So again, really big deal. This is just one more step closer to the Clarity Act. We're kind of getting some insight into what the Clarity Act is going to cover anyway. So pending any changes, pending any difference or any more speeches by Paul Atkins, we can safely assume that, Clarity Act's going to get passed. We still are waiting on what they're going to be doing about stablecoins, rewards. You have Jamie Dimon saying that, hey, if stablecoin issuers and players, want to come into the space, they need to be treated as banks, right? We need to make things more fair, right? Which is hilarious coming from, the banking industry, because they have never, ever played fair, right? They have always anyways, let me get off that rant. But anyways, big news, like I said, for the crypto industry and for, coins like Bitcoin. All right. So with that out of the way, let's move on to some Nvidia news. I just want to check real quick the chat. So NFTs were just a prequel. I still don't understand the whole NFT craze. I never did. I know it was like a real big meme at one point, and why can't, like, what would stop me from just screenshotting the NFT and then holding it as like I own this NFT, right? I know that's not how NFTs work, non-fungible tokens and ownership and all that other hoo-ha. I don't fully understand it. I never got it. It was crazy back in 2020, 2021. It was like a meme mania, right? That was right around the same time GameStop was going crazy. I just never understood NFTs and the fascination or the use case for them. I know a lot of, there's a lot of articles coming out saying that, you could use NFTs to basically launder money. So anyways, I'll leave it at that. All right. Yeah. Yep. Banks are holding that train, right? Signing that Clarity Act. This is a big, the crypto industry and the stable coins, that is a big punch to banks. Because why would I hold money in a JP Morgan or a Bank of America earning a disgustingly low interest rate when I could just dump it into an exchange and earn, a 4.5 yield on my money in a stable coin, right? Or whatever the case may be. Like, why would I go with these banks that are going to nickel and dime me, charge me fees, maintenance fees? Remember that, maintenance fees, right? They charge you a maintenance fee for your bank account. Why would I do any of that when I could just go with a stable coin, right? And earn a reward on that, right? Keep my money in stable coin, move it to USD whenever I need to have something liquid, right? I mean, the use case for stable coins, the more I learn about stable coins and why they're so important, it makes me start to consider, why the hell do I have my money in a bank, right? Why do I even have my money in a bank? I hate banks, to be honest. Anyways, let's see. Can't say that laundromat equals NFTs. Yep, that's true. Yep. I bought a bunch of .crypto domains. I haven't seen one ever, says Champs. I did like this whole idea of Web3 coming out, something to keep in the back of your mind as far as like domains and things like that. Because it's very possible people are just ahead, right? Ahead by a decade, ahead by a couple of years, because Web3 is coming out. And again, I don't know a whole lot about Web3, but I know that when we're talking about the involvement of WorldCoin and proof of human, that Web3 is going to be that proof of human, or at least a piece of it. So that is as much as I know. It's very surface level, but maybe you're just ahead by a lot. I don't know. I've never seen a crypto domain, to be honest. And if I did, just me personally being, someone who's on the internet a lot, if I did see a .crypto domain, I'm already immediately thinking it's a scam, right? Immediately thinking it's a scam. But maybe crypto domains, eventually become the norm in the future. I have no clue, right? But I'm just speaking out loud here. Let's see what we have here. Sergio says, I like what Hood and Coinbase are doing against banks' status quo. Yep, absolutely. As a matter of fact, maybe at some point I'm going to consider Robinhood for additional services, because they're coming out with a lot of stuff. And again, I'm bullish on Robinhood and what they've been doing. Vlad, CEO of Robinhood, just did a interview not too long ago. I think it was last week with Amit Investing on the Basis Point podcast. I haven't even had a chance to look at that. I definitely want to, but it's something people can consider if they want, at least some of the ideas, inner workings of Robinhood. All right, so someone's revving their engine out here, trying to be cool. All right, we're gonna move on to Nvidia news. All right, Nvidia's big news. All right, all around. They just had their GTC conference. Jensen Huang is up here on stage talking. It's almost a 2.5 hour long keynote speech. So I will be going over this myself after the stream, and I'll probably have some clips that we can watch tomorrow. So definitely keep a lookout for that. Really interested. I think if people, if you're investing in Nvidia, if you want to know what's all the craze of Nvidia, these GTC, keynotes by Jensen are phenomenal. It tells you exactly where Nvidia is, what they're building, what they're forecasting in the future. I have really enjoyed it. If you're not a technical person, not someone who knows or understands hardware or manufacturing of this hardware, or why CPUs, GPUs are so important, etc., that's perfectly fine. You can at least see the direction that Nvidia is heading into and where the industry is heading into. So again, people were talking about Nvidia being a dead company last year, right? When the stock was pummeling. I think it was like the high 80s. I don't know if this chart's 100% correct, but I'm pretty sure it was the high 80s. Only for the stock to rebound quite a bit, right? Still up almost 100%. All right, still up almost 100%. But everyone at the time was calling, Nvidia is dead, data centers are dead, stock's not going to go anywhere, et cetera, et cetera, et cetera. You guys should do your own due diligence, of course. Just look at this, right? Look at this crazy chart. Can it come crashing down? I don't think so. And that's because of Nvidia's important role in this AI story, in the AI thesis. You cannot have artificial intelligence without Nvidia. Yes, there's several other chip makers coming out. Yes, there's new hardware being produced, new chips, etc. But Nvidia is at the core of all of it. They have not only their GPUs, their hardware that powers AI, but you also have their CUDA library, which allows people to build these models, right? For automotive, manufacturing, let's see what else, AI robotics, physical AI, you have physics in there, you have science-based CUDA libraries, you have all this stuff that's inside of the CUDA library, right? And Jensen Huang said, publicly in one of his keynotes that the CUDA library is Nvidia's gift, right? Basically to, I don't know, I don't want to misquote him, but I say it was his gift to basically humanity at this point, right? But he's taking it a step further, and in this conference, I haven't seen it yet, but I know it was mentioned. They mentioned their open source, basically Claudebot, right? Their Claudebot, copy. They're going to open source it. I think that's going to be the next big thing. And he's going to be talking about these AI agents in this conference, in this GTC keynote. So definitely want to see this. But anyways, let's move on from this. Talk a little bit more about NVIDIA. Okay. So this is just a clip from CNBC. So let's listen in.
Lower today as the chip giant kicks off day 2 of its GTC conference in San Jose. Joining us this morning in a CNBC exclusive is NVIDIA's founder and CEO, Jensen Huang, with our Jim Cramer. Hey, Jim.
Oh, thank you, Carl. Jensen, I do want to point out, someone said to me the stock's down 30 cents. Your stock's up 22,000% in the last decade. Should we care about the last half hour?
Well, I guess we all do. Our growth is accelerating at a larger scale. That's surprising for people. And the end markets are really growing. We've reached this point in AI called the inflection of inference. And so we've reached the inference inflection. And so, our growth is accelerating. We would love to see everybody enjoy it.
Well, people got a little trapped by the 500 billion to $1 trillion. And I like that over 2025, 24/7. What trapped me was that when we were talking around with Michael Dell yesterday, that Jim, do you remember when I told you that ChatGPT could be big? And I said, well, yeah, I do, 10 years ago. And he goes, NemoClaw. He said, NemoClaw, this may be even bigger. I start my morning with NemoClaw. Could you explain to people why this may be what we're thinking about over the next 5 years and not?
So NemoClaw is the Claudebot, not replica. I want to say it's not even a copy. It's, I guess, the same as OpenClaw, but NemoClaw is supposed to be that agent for, you can install on your computer and it could, click around, do things for you. So it's a big deal. It's a really big deal, especially for NVIDIA to be in that space, to be branching in that space. Let's continue.
Something involving margins over the last 5 minutes.
Well, first of all, I said at the keynote, and I referenced a number I used previously because I want to give everybody a baseline. And so last year I said that about this point that we had $500 billion of high confidence visibility of Blackwell and Rubin. That's it. We obviously our company sells other things.
Right.
We have CPUs, we have storage processors, we have networking, and so we have all kinds of things that we sell in addition to that. We have $500 billion worth of visibility, and at this point, with another 21 more months to go to the end of 2027, we already have high confidence visibility of $1 trillion plus of Blackwell and Rubin. Not anything else, just Blackwell and Rubin. And so, we still have 21 more months of new orders coming in. We still have all of the other things that NVIDIA sells. And so I just wanted to give everybody a baseline. The ecosystem needs to know directionally where NVIDIA is going. Now, of course, we plan with the supply chain. We help everybody with their capacity building. We prepare all the technology.
Let me go back real quick. $1 trillion through 2027 forecasted for their Blackwell and Vera Rubin systems. $1 trillion. Huge, right? How could you not be bullish on NVIDIA, right? People are still saying that this company is dead and you shouldn't buy it and that NVIDIA is going into the dirt. I don't know how. Like how? And this is probably not even including China sales, right? I would assume so. This is not including China sales, even though we do have a note now that just came out that NVIDIA has finally an order from China. So we'll cover that in a little bit.
Building, we prepare all the technology partners so that we can support $1 trillion worth of Blackwell and Rubin. And so it's an incredible thing.
You bought Grok in December.
Yeah.
What I heard yesterday, maybe my biggest takeaway, was it's already going to be making you not money, but a huge amount of money, and that's not part of the trillion.
No. Yeah, we started production of Grok version 3. It's a really, really special company, and we're going to add Grok, not to every part. Vera Rubin is so incredible that it's really hard to add value to Vera Rubin. That engine is so incredible. And so, but there's some part of the workload, I think about 25% of the workload, where we could add Grok to it. And so for 25% of the workload, we could increase our opportunity even more. And so,
all right, that's not Grok as an XAI Grok, right? That's Grok, G-R-O-K. It was a company that NVIDIA had acquired earlier this year through a merger acquisition. So let's listen in on another one, all right, another clip for NVIDIA.
Welcome back. NVIDIA's Jensen Huang says the company's revenue could hit $1 trillion through 27, but the stock reaction was muted yesterday. Christina Partsinevelos is at GTC in San Jose, joins us with more on the street's reaction to yesterday's event. Hey, KP.
Hi, Carl. Well, Jensen Huang, the CEO, spent literally 2 hours and 15 minutes on stage making the case that NVIDIA's best days are still ahead. The headline number you mentioned was at least $1 trillion in cumulative revenue through 2027, which was double the previous figure that we got back in October at their GTC DC. That sent shares initially up over 4% higher in just minutes. Then investors did the math, thought maybe the acceleration really wasn't there, and NVIDIA lost roughly $150 billion in market cap in just the span of about 10 minutes as enthusiasm just faded. The problem is that $1 trillion isn't that far from where Wall Street already was. So the new number barely moves the needle. Mizuho's Jordan Klein writing that GTC risks becoming maybe overhyped and an annual snoozer that moves nobody, drawing a direct comparison to Apple's iPhone event in September. A little harsh. JP Morgan, though, pushing back, though, saying NVIDIA's platform, now spanning 7 chips and 5 rack systems with the software to tie them all together, is just simply too difficult for any competitor to replicate. And with demand broadening beyond hyperscalers into sovereign AI, enterprises, industrial customers, the cycle is more durable than the market is actually giving it credit for. Jensen Huang, the CEO, backing that up on CNBC just in the last hour with a comment specifically geared towards memory. Listen in.
we're the only company in the world that now optimizes the entire data center across 3 different types of memories. HBM, and we have some excellent partners there, HBM4 coming, LPDDR5, the world's first low-power memory used in data centers. We invented the whole idea. Everybody's going to use it in the future.
Low power memory, right? Because that was one of the biggest things that AMD had over NVIDIA, is that their GPUs are, focused around lower power consumption. But he also mentioned HBM, right? HBM4. You have Micron and SK Hynix by extension, right? You have Micron that has just come out. They're ramping up production for the HBM4. So there's still a bottleneck for memory. Samsung Electronics, SK Hynix, Korean companies, and Micron. All right, ticker MU. These companies are the only producers, as far as I know, of DRAM, of that specialty RAM, random access memory, that these semiconductor manufacturers need. So big stuff is still happening. He mentioned it in the other video that the best days are ahead. So let's continue listening in.
So for memory investors, that's a direct call out to names for high bandwidth memory suppliers like SK Hynix and Micron. Even SanDisk is climbing higher today on a signal that demand is about to accelerate, even though supply is just still so tight. Morgan Stanley's Joe Moore calling the sell-off an attractive entry point right now and keeping Nvidia as his top pick in semis, saying the market will eventually get more comfortable with his 2027 growth number. And when it does, the stock will outperform. The setup is there. This is according to him. The market just needs to believe it. Carl.
I mean, it does speak, Christina, to this disconnect between the commentary and the bullishness we get from Jensen Huang and the analyst community, which has all stepped in and been equally bullish. I mean, we heard even Stacey Rasgon, who's been skeptical before. He loved what he heard and said that he doesn't think the stock can get much cheaper. And then the market, which is showing a stock that has been in a range and barely moves on this kind of update.
Yeah, Sarah. So every day as a reporter, I have to put a pitch in, and that.
So just real quick, what they were saying is that there is a big disconnect between the narrative, the story for Nvidia, and what it's actually doing. What it's actually doing is crushing it in earnings. They're able to sell their chips, or they're coming out with new products and services. They're expanding their partnerships. What's his name? I'm sorry, over here. Sergio had mentioned that they're expanding their partnership with Nebius, which was mentioned in the GTC conference, right? They didn't mention CoreWeave, but they have partnerships with these massive data centers. And who do you think the massive data centers are going to be buying from? They're going to be buying from Nvidia. But Nvidia also has partnerships with other companies, right? The biggest bear case against Nvidia and this whole AI trade, this whole AI story is the circular financing, right? The most recent example we can use is SoftBank sold all their Nvidia shares, gave the money to OpenAI, and OpenAI basically used that money to buy more Nvidia chips, right? So that is the biggest, bear case that I have come across. Circular financing across all these AI companies, all these AI, companies that have their hand in the pot, right? So, but Nvidia is putting up the numbers. Their earnings are great, and they're forecasting $1 trillion. Now, she also mentioned that's not far off from what Wall Street had already thought of, right? So again, the price may not be cooperating right now, but it doesn't mean it's a bad company. People look at the price chart and they're like, oh, Nvidia is not doing well. Nvidia is bad. It's just going to trade flat forever and eventually implode on itself. If that's what you believe, you could be one of those people that called that same thing back in April of last year or February through April and then miss out on 100% gain, right? Over that next year. Now, was 2025 an exceptional year? Definitely. It's definitely an outlier. That's when AI really started to take its place, become the narrative, become the trade, have a story. All these companies, I mean, OpenAI just mentions another partnership with another company, and that stock rose, crazy. And that's why we saw that big sell-off, or the big sell-offs happening, October, November, all the way through December, right? That's why we saw that happening and continuing even now. But anyways, let's finish out this clip and then we'll move on.
That was exactly my pitch, the disconnect between the generalist market and then the entire chip community, which is, there's nothing that can, sway their opinions about how strong they believe NVIDIA is. I think the problem with the general market is that the upside is no longer there. This is a massive company, right? So to swing it even higher, you really have to move the needle. So I think that a lot of investors are thinking there's more upside in the supply chain as opposed to just NVIDIA itself. And so I think that's a difficult point for the CEO, Jensen Huang, to really have to sway the market and say, like, oh, look, we can go to $5 trillion just within the next year or so. And I think the market isn't convinced that such a big company can move even more despite the demand being there.
Okay.
All right, so there we have it. Shout out to the 101 X viewers. Appreciate you guys joining me on the stream, and the 24 YouTube viewers. Appreciate that, guys. If you guys would kindly, if you like the content, like the stream, please don't forget to smash that like button or subscribe or follow if you do like this. Okay, moving on. So anyways, I just wanted to cover that. Again, potentially discounting NVIDIA. You could probably be one of those people, unfortunately, that miss out on this, gain that NVIDIA could have again in the future, right? AI is not going away. AI is not dead. The data center thesis is still intact. There will be a huge demand for data centers because AI is going to be everywhere. We see that already happening with all of our cell phones. They're building native AI chips, semiconductors for cell phones, right? Qualcomm coming out with their own chip for cell phones that have AI integration already in it, right? Not AI the software, but it's able to interact with AI natively on the cell phone. So all that stuff is coming, right? Some more news about Nvidia. Nvidia finally received Chinese purchase orders. Okay, Nvidia has received purchase orders from customers in China. Jensen Huang said on Tuesday, "We have received purchase orders and we're in the process of restarting our manufacturing." Huang said in comments made at the company's financial analyst event and obtained by CNBC. And so that's new news for all of you, and it's different than it was 2 weeks ago or even 3 weeks ago. All right, Wang has previously identified the Chinese market as a $50 billion opportunity for Nvidia. They lost a lot of market share, basically all of last year because of the tariffs, and then the tariffs were implemented, and now they're not. And then it became like they need a license, and then it became that they need to give the U.S. government some profit if they want to sell their chips to China. All this nonsense for Nvidia, but they've been chugging along, and even now, Jensen Huang saying that it's a $50 billion opportunity for Nvidia. All right. Last month, Nvidia said it anticipated first quarter revenue to be about $78 billion, plus or minus 2%. Huang also added that the company will look to use some of its free cash flow and return it to shareholders. He said the company will spend 50% of its free cash flow in 2026 on stock buybacks or dividends. All right. So for those who aren't familiar with why stock buybacks are important, it's basically showcasing that, or at least an indicator that the company is I don't want to say bullish on their growth, but that they believe in their company and strong growth in the quarters ahead, right? Or they could pay it out as a dividend to investors, right? Which would also be nice, because I think the dividend for Nvidia is like less than 1%. I think even lower than that. I think it's like 0.10% or something. It's really not a big dividend, but again, here it is, a quarterly dividend of 1 cent. I mean, you're not exactly going to be swimming in it, right? So let's see what else we got. Okay, so moving on. All right, just some more news about Nvidia, especially if you're looking for different ideas to invest into, right? Different angles to invest into the AI trade. Lumentum Coherent Credo trade mix as Nvidia CEO Jensen Huang reaffirmed copper use. Copper, okay, we've talked about copper and the bullish fundamentals for copper in the future, right? Not enough mines, not enough production of copper. Copper wiring is needed for electrification, updating the whole electric grid for these data centers, and you have the data centers themselves that need copper for the backbone, right? It's not going to all just be fiber. So this is a huge piece of news, right? Shares of optical companies Lumentum, ticker LIGHT, and Coherent were mixed in early trading on Tuesday as Nvidia CEO Jensen Huang reaffirmed the company's use of copper in its server racks. Lumentum erased pre-market losses, gained nearly 1%, while Coherent fell fractionally. Credo Technology, which produces active electrical cables, fell nearly 4%. During the early 2.5-hour-long presentation that spanned several topics, Huang said that Nvidia would use copper and co-package both optics in its upcoming Vera Rubin Ultra and Feynman lines, with both options advancing in parallel. Earlier this month, Nvidia invested $2 billion each into Lumentum and Coherent and expanded partnerships with both companies. And I still have not fact-checked this. I forgot to, but I believe Lumentum and Coherent were added to the S&P 500. So big deals for those companies. Shout out to anyone that did have positions in LIGHT and Coherent as well. All right, but these would be, kind of infrastructure plays on the AI, story. I have not done any due diligence on LIGHT or Coherent, but I do see them mentioned a lot when it comes to their fiber optics, right? So definitely something to keep an eye on. So I'm not going to cover this in depth. We're running close to pretty much an hour here, but the Golden Dome missile shield cost climbs to $185 billion as Pentagon speeds up defenses. Okay. We talked about the Golden Dome last year and a little bit this year as well. Basically the Golden Dome's objective is to create this missile defense over the United States. Greenland, the importance of Greenland was because of the Golden Dome and because of potentially probably mineral extraction in the future, or metals extraction. But Golden Dome, really important, and we see that it's still out there. They're raising costs, so this could be good for companies in the defense sector. Not saying that, Lockheed Martin or Raytheon, or I forget who NOC is. Who's NOC? Northrop Grumman. I'm not saying these are going to do well all the time, but, this could be bullish for them. Palantir is a part of the Golden Dome initiative as well. So if you're looking to play on this, theme of defense spending, especially from the United States, on this particular project, which is already totaling up to 185, or they're potentially looking for an additional $10 billion to bring it to a total of 185. Then these companies, you can look into for your own portfolios. Defense contractors have been seeing a huge spike recently, and it's because of all the turmoil that's been happening, right? Let's see. So this was March, and then they've kind of been giving up some of their gains. But the defense contracting industry is not going anywhere, at least over these next 4 years. I've spoken about this before, but, this is a government super cycle. I hate using the super cycle word because it seems like it's just, it's like today's, hot topic word. But the super cycle is true. All these other things that are happening, we have the Clarity Act, we have the Ethereum, super cycles happening. We have the commodities, potential super cycle that's happening or still happening or playing out now. All of that is because of government. All of that is because of U.S. policy. And, right now in the Bitcoin space or the crypto space, we're expecting the big print, quote unquote, the big print to happen. Federal Reserve is going to lower rates. Quantitative easing is going to happen, or gradual quantitative easing is already happening. And that would be bullish for gold and for, Bitcoin. It's already been stated several times by the administration that they want to keep the dollar weak, right? They want to keep the dollar weak. So, and right now the dollar has been spiking up, which is been putting pressure on gold as well. But the whole idea is to have the dollar weak so countries can purchase from the United States at cheaper rates, right? And that would be bullish. Well, I hate to say bullish. That would be good for GDP, good for the economy. So at least that's the idea. Again, we have to wait and see how all of that is playing out. So anyways, that will do it for this stream, ladies and gentlemen. That has been, we've covered a lot in this stream. We covered the SEC crypto guidance. We covered a little bit news with a new, well, not a new, I keep calling it a new, but with an ETF that is changing its distribution from, 4.5% to 10.5%, which is a big deal. Keep a lookout for Income Architect. Subscribe to them if you haven't. We also had some news about Bitmine. All right. So we had a lot of stuff come out, and I hope you guys really, really enjoyed the stream again. Let's see what we have here. Just checking the comments. Where's the commodities quant at today? And we had Padre says, I'm here. All right. So welcome, Padre. Always a pleasure. Let's see. Oh, actually, so I see you. What's going on with gold? And Padre says, sideways consolidation. Who's going to save Japan? Yeah, Japan's, I don't follow that Japan carry trade or their interest rate or anything really going on. Excuse me. Yeah, but I know they're, I saw an article, didn't read it, should have read it, but I did see an article saying that there is a potential for Japan to finally have its breakout moment, right, for its market, because it's been in a choppy, sideways, lost decade type of market. So if this is the breakout, this is good for Japan and Japan investors. But again, I have nothing to back that up. I have no articles. I skimmed it briefly. So let's see. So yeah, that'll pretty much do it for this stream, guys. Let's see. Padre says Japan's looking like it's about to have a reverse carry trade. And they're going to start pouring money into the US, into USD. That'd be kind of crazy. Oh yeah. Well, I don't hold any SGov. I don't hold any bonds or treasuries anymore in my portfolio. Damn, there was something important there. There was a point. Stay diversified, gang. Yep, absolutely. Absolutely. Yeah, going back to the stablecoin. For those who are not familiar, stablecoins, they have to use US treasuries, right? They have to use U.S. Treasuries. That was part of the whole thing. With the Genius and the Clarity Act is that they have to use or be backed by U.S. Treasuries. And if you believe in conspiracy theories and things like that, this is basically a punch to U.S. debt. That this is one way for the U.S. to basically erase their U.S. debt. Although, what are we at now? $39 trillion in debt. I don't think that's going to erase it. But who knows, right? Who knows? Let's see what else we got here. Well, ladies and gentlemen, I think that's going to do it for my stream. I'll stay on for the next 5 minutes in case anyone has any questions or wants to cover anything. As a matter of fact, we can take a look at that OVL ETF now that I'm thinking about it, because I still have not even really looked at. Well, that was scary. I have not really looked at the product page. So this is OVL. This is what we were talking about earlier. Let's see what is going on here. So this is large cap passive equity exposure with active risk management, put selling option overlay that seeks to generate additional income. So they have puts in this. Let's see. Ticker OVL. Was this 168 billion? Million? No, 168 million, not billion. That's not bad either. So monthly, it's going to be a monthly distribution. Yeah, so this is their chart that they use. $39 trillion. Who do we owe? The goddamn Decepticons, says Skeptic. Man, I don't know who we owe, man, but that person or organization is going to come break the US's legs. Yep. So this is OVL. Continuing to look here. Let's see what else we got. Let's take a look at their fact sheet. See what their fact sheet brings up. So this is their magic sauce right here. Excess returns generated through option premium collection. Complements traditional factors such as value and growth. And these are the two fund managers. So we'll probably be seeing one of these two come on the Income Architects channel in the future, I would assume, because he did mention he's going to be speaking with the fund manager. So whoever that might be. So we have, I hope you guys can see this. Let me see. There we go. There we go. It looks a little better. All right. So the overlay shares large cap equity ETF, dual purpose for your assets, generate cash flow through index option investing, and then diversified broad market exposure, highly liquid, transparent. Yep. It's going to be interesting to see what this does. I hate to, I know that's a super it's like a cop out, statement like, oh, I wonder how this ETF is going to do. We'll see. Right. I know that's kind of a cop out, but I mean, I don't know anything about this ETF. Just looking at the chart, it looks nice. I definitely want to see, I think, again, this is just my thoughts. I'm speaking out loud. That 10%, depending on if they're going to keep it at 10%, because I don't see anything saying that they're going to just keep it like it's a managed distribution rate. If the S&P 500 has a bad year, it would be very interesting to see how this one plays out. Because if they're also including puts in it, they're not just trading down, the whole time. So that would be a net positive for the ETF as a whole, or hedging and all that other fancy stuff. So. Yeah, it might actually give a run for NEOS run for their money. Let's take a look at the rankings here. All right, let's see. Look at, man, this is what a joke. Citizen of the Year YouTube channel. You guys can check him out, but he's at let's see, 111,000. He's all in on Micron. So good for him. Victor, let's see. Ooh. Yeah, you had a bit of a dip, bro. You had a bit of a dip. So curious to see what actually got pummeled. Again, this ATCX does not populate. I added it, removed it, added it again, and it won't populate. Pay Me in Dividends, another YouTube channel. Let's see. He is up 108,000. And he's in a mining company, Dtref. It looks like that one is the one that's actually doing it for him. Let's see. Yeah, 34%, up 34% since we started this channel, this challenge. All right, let's see what I'm getting cooked. Let's see. CoreWeave, obviously. I mean, it's mostly like crypto treasury companies, you know. I have a couple miners in here. Uami's actually been doing pretty well for me. My actual position has been doing pretty well for me. It keeps, you know, it keeps swinging up and down like pretty badly. Like I was up like 37%, and then I checked it again. I'm like at 11% gain. Like I was like, what the hell is happening? But I'm pretty bullish on Uami for all the things that it is doing. It's a lottery ticket for me, more or less. Same thing with USAR. I do actually hold positions in these two companies. Let's see what else we got. Theta Decay, down. Super Straight Guys close to 98. So yeah, we're all slowly recovering. All right, let's check out that SPY eye comparison real quick. Little SPY eye action with OVL, the Oval ETF. All right, just on the 1 year for price return. Jesus, look at that, 16% just on price return. We got to include an index in this just to see. Wow. All right. Well, again, they just changed their distribution, so I think that will be different for their actual price return. But I mean, even so, that's really impressive. All right, so let's see what the total return's looking like. Yeah, they're pretty close. Interesting to see what will happen to Oval's share price after it starts distributing 10%, because I really do think that'll have kind of the same price return as SPY eye, excuse me. I think we'll start to see it start to trade closer to SPY eye, because SPY eye pumps out what, like a 12% distribution when annualized. Let's see. Yeah. So the big difference is going to be distribution rate of 12%. The big difference is going to be that, and I don't know this for SPY or SPY eye, is the puts that Oval has. Now there it is. So Oval has, you know, the puts and everything, so it can at least capture some downside. Where SPY eye, I'm not sure that is the case or not. Don't hold me to it. I wouldn't be surprised if they also have that same feature built into the ETF. But I haven't kept up with these ETFs. They keep changing things, like keep updating things. They're only getting better. It's too much for me to honestly keep up with. I just watch other videos of YouTubers out there. Again, shout out to Income Architect. You have Spencer Invest and Marcos. So those are three big ETF review channels. All right, guys, I think that's going to do it for me. Ladies and gentlemen, I do appreciate you guys joining me for this stream. All right, to the 112X viewers, thank you for joining me. All right, really do appreciate it. Hope you guys have a wonderful night. To the 25 YouTube subscribers or YouTube viewers, all right, also appreciate you guys. But that's going to do it for me. I will see you guys in the next stream. You guys have a great evening, great rest of your day, wherever you are in the world, and I will catch you guys later. Thanks.